Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the Giga Pump on the Bitcoin chart. Of course, that did correspond to a couple things that we've been talking about, specifically the possibility of the Federal Reserve pausing interest rates. And of course, they did do that. So that was bullish for the market. And guys, even though we had a temporary down moment after that news, it was clearly a fake out, guys. You have to remember that when the Fed pauses, it frees up liquidity to go into more risky assets. And so that's why we're getting some of this pump. Now, also, of course, there's that news about BlackRock potentially entering the Bitcoin ETF market. Now, guys, I just want to let you know that this is a little bit of a buy the rumor, potentially sell the news event, because the market is going to start building that into the price structure, which is again why we're getting a little bit more pumpiness. And just understand that it's not approved yet. There is no ETF yet. This is nothing yet, okay? It's just pure, unadulterated, cracked out hopium, which is, the stuff that the crypto market basically runs on. So, we're not going to, we're not going to dismiss that. Of course, we're going to take it into account, but just be aware that, there is the potential for the ETF to be rejected. It could be delayed forever, even months, right? And guys, it can also be a sell the news event once it gets approved, because it will already be built into the chart. Now, we can already see the track that the market's taking a little bit of bullishness, and so we understand that it is, in fact, by the rumor. And usually that's followed by a sell the news when it happens. But in this particular case, we have to put an asterisk, because the thing about an ETF is that they buy Bitcoin, right? So this is different than under other types of news. Other types of news, they don't buy Bitcoin, they don't buy crypto, right? And so if this news is one in which it actually buys Bitcoin, then that could change the dynamic. Okay, just understand that there's a little bit of complexity with this ETF narrative. And again, guys, it's not even approved yet. We're just trading on rumors on that one. But in case of the Federal Reserve, in fact, the Federal Reserve did pause interest rate increases, and that does, in fact, allow liquidity to be redirected into the markets. Additionally, China has started to pump out some additional liquidity. So the markets are just feeling a little bit better saturated with money. And while a lot of that is still going into tech companies that can benefit from AI, or other companies that can benefit from AI, as that AI money kind of trickles down and kind of leaves Bitcoin in the dust, it will eventually come back to Bitcoin once all these valuations in the stock market are sorted out. And we're starting to see that with a little bit more strength. Guys, on Monday, the markets are going to be closed. So that does suggest that the low liquidity conditions on the weekend, where there can be some scamminess in the price, are probably going to continue into Monday. So just be aware of that. And additionally, Chairman Powell of the Federal Reserve will testify to Congress on Wednesday and Thursday this next week. So just be aware of these events, guys. Let's just jump straight to the charts. Let's take a look at our wedge. Of course, we were expecting the potential for this head and shoulders here to have a breakdown to a measured move of 23,000. And as long as we're under the neckline of that head and shoulders, and we're just retesting it bearishly, okay? We haven't like flipped it or anything. As long as we're just testing it bearishly, then we could always break back down to the measured move before doing all this again and just going on our merry way north. So Yeah, guys, remember, it's not over until the fat lady sings. And again, there can always be shenanigans on the weekend. We're just in this wedge, so it's just totally indecision central, right? Until we clearly grab one side or the other. And we just have not yet. Okay, I just want to be like your common sense source of advice over here, guys. Of course, not financial advice, but at least I know what a triangle is. Okay, and I can see that we're inside of the triangle, and we haven't decided to break out of it, and we haven't decided to break under it yet. Now, it looked like that we were going to break under it the other day, but then, with the Fed pause and with China putting in liquidity, and then, of course, with the BlackRock announcement, this chart was just like, nope. Just gonna try this move over again, but just be aware, guys. We haven't actually recovered the neckline of that head and shoulders, and the measured move is still to 23,000. And again, like I said in the last episode, don't say I didn't warn you if that happens. That said, we're seeing good stuff, guys. Okay, we're seeing good stuff. We're seeing exactly what we wanted to see. In fact, this entire move here might just be truncated. Okay, it's just going to end up being this little blip, and then we go on our way, because maybe the BlackRock news and the liquidity from China and the Fed pausing is just that bullish, okay? And maybe just bears, maybe just they just stood no chance. They just couldn't push it down to the measured move. But we do have to remember, that that target is still there as long as we are under 27,000. Okay, guys, as long as we're under 27,000, as long as we haven't flipped this wedge to the upside, then that target down here still exists, and just keep it on your radar, okay? I don't like good people getting hurt just because of weird little stupid technical things in the market, okay? So just want to make sure that we're all aware of that. As it happens, we are above the Bollinger Band midline on the 6 hour right now, and we are just testing the top of the wedge. Now, historically, that means that we come back to the middle, so there's the Bollinger Bands right there on the 6 hour, somewhere around 26,000. So if we came back to 26,000, no skin off our back. This is kind of like, again, if we're doing the preemption of this move that I was talking about over here, then it's just kind of like we're just doing it right there, right? It's just that the drop down, right? The fake out to the downside, the fake out before the breakout was truncated. That's all. And so we're going to see what happens. Now, if we lose the middle of that wedge, that's going to suggest we're going to come back to that 25,000 area, and then that could front run a drop to 23,000. What could cause that to happen, Alpha Fam, is that there's a few hiccups going on in the federal debt limit ceiling or whatever negotiations with Congress and the president. Some of the Republicans are walking back their positions about their promises, and so there's a couple issues going back to the negotiation table, and that could cause a couple hiccups in the market. That just could cause a flash wick if it does spook the traditional markets, and then most likely that would be settled, and then we would probably just pump back up. I mean, unless one side really wants to just collapse the US economy, then we could go for a tailspin, but I think they would settle it pretty fast. Okay, guys, maybe we just have a couple scary days. That could happen within the next month or so. So hopefully we can just flip this out of this wedge pretty fast, just to get a little bit extra support underneath us, right? Because as long as we're in this wedge, we're going to be vulnerable to that debt ceiling limit debate. Okay, so there's your macro issues going on. There's your macro wedge. There's the the head and shoulders here, and what we're really looking to do, if I go to the weekly, what we're really looking to do is just not get embedded below this Bollinger Band here on the weekly. It's okay if we ride on it. There's totally no problem to ride on it. Okay, we're just healthily retesting the Bollinger Band. What we don't want to do is close tomorrow underneath the Bollinger Band midline. That would front run, that would make a move to the downside potentially front runnable. Okay, guys. Now, how far to the downside? It just depends if the next couple candles correct for it, or if we put a couple candles that get embedded, and then it could be like 8 months to the downside. If we do correct it within the next week or so and just get a kind of flash wick down, a flash wick up or something, then, we've done this kind of thing before and it's scary. We don't like to see it happening, but, it could just be a liquidity grab to the upside. We're not out of the woods yet, okay? We still have to see how this wedge is going to play out. So I'm going to turn off the wedge there. Let's go ahead and drop down to the 1 hour. And on the 1 hour, you can see that we just have about 8 minutes left to go. Nevertheless, I did put a 1 hour I did make a new 1 hour chart. And as you can see, this is a 1 hour candle, and we did lose the momentum pool. So what do I say when you lose the momentum pool? You can take the trade to the downside, right? So we lost the momentum pool, and this trade to the downside is occurring. Now, if we are able to, hold the volatility pivot, then that would be actually the initiation of a setup for a potential long, where you could take this long to the other side. Personally, I'm not against that. I would just like to see us get embedded above the Bollinger Band first and enter the momentum pool. And then I would say the more guaranteed play is if this move happens, then we take this move across the pool from 26,507 to 26,583. And then if we flip that, we just continue. And again, our stop loss is under the pool. And so that's your alpha trade on the hourly. Guys, just remember that if you do take the trade off the volatility pivot to the Bollinger Band midline, that is front running. And that's a little bit more risky position because we could end up having a breakdown at the neutral point of control. Okay, like this all could have just been a little bit exuberant on the hour, and maybe we need to touch base a little bit deeper. And I'll show you why that might be the case in a bit. But let's go ahead and just flip on some EMAs on the hourly, and you can see that the hourly is starting to initiate a potential squeeze. So if we don't get that pop back up, again, this thing could continue to squeeze to the downside. That's why I don't like to take that play unless we've captured a momentum line, just personally. But again, if we hold it, then you can take your chance, guys. Okay, you can take a shot. Let's go ahead and just take a look at the old 1 hour here. And if we do just take off of those EMAs, then we can see that on the old 1 hour chart, we were quite successful. Guys, again, this is the previous chart here. So let's see if I have that. It's kind of 1 hour learning thing. Yeah, there we go. You can see that we did have a play to the upside over here where we, just like what I was saying, we were above the Bollinger Band midline, and we entered the momentum pool. We took that play to the upside. Brilliant move. Then we re-entered the pool. We could take it to the downside. A little bit of a fake out over here, kind of false starts over here, but we did eventually cross to the bottom. What happened from there? We actually held the bottom of the momentum pool, and as we started to drive up on, you would have been looking at the 5-minute or the 15-minute. Then you could have taken that to the other side. And in fact, this trade just continued to go. So this setup here with the hold momentum line, just want to show you guys, these lines are working. You would have gotten off of this wick, you would have gotten a nice 6.5%. Of course, we entered over here also. You never got stopped out. I just want to make sure that you understand this. We never got stopped out on this trade, and so in fact, this is the entire trade right there. And so that's just a one shot. Just enter, and then we could have been up 7% now. Now, for some alts, that's like 50%, 20% on leverage. This is God knows what, okay? It could have been 700% if you were 100x. But yeah, so I think that I'm just showing that these, the momentum pools are working. They're doing their job. They are paying dividends. And looky here, guys, okay? I didn't even notice this, but we pushed up to the bullish control zone. And look, you can see this battle between the bears and the bulls on the 1 hour. And again, look how long ago, okay? Look how many candles have gone by. Look how many candles have gone by since I made that momentum pool, right over here, and yet it's still performing for us. Look at that natural barrier, okay? So just want to prove to you guys in full transparency that these charts are working and that you can trade off of them, all right? All right, guys, so that was just the 1 hour there. Let's go ahead and just refresh you on the new chart because, again, that was the old chart. And so that volatility pivot is 26,408. And then the top of our pool here is at 26,583, where I would expect us to potentially launch. And, if we get above 26,507, then for me, that would be a trade that I would take to the north. We are getting a little bit of a bounce here. We got 2.5 minutes until this hour closes. So we're getting a little bit of a bounce off the neutral point of control. And it does suggest that bulls are just holding a little bit of their advantage on this chart, especially since it looks like we're going to close above the volatility pivot. Maybe there's a chance for this thing to bounce and then re-enter the pool, in which case, again, that's it's a tradable moment for me. Let's go ahead and jump over to the 6 hour. Guys, we can see the previous chart. Let's just take a look at the previous chart here. And what we had on the 6 hour was basically the momentum pool down here. And same thing as the 1 hour. You could have just entered on the 6 hour as we entered up here, or on the retest. As long as it was at the bottom of the pool, then you could have longed that one. Or when we crossed above it, you could have longed off the top of it. And of course, I don't particularly like that play because we are above the volatility pivot. But once we were above, let's just say that you didn't get this entry right here, okay? Which, by the way, you would have taken off of my hourly chart, okay? But anyway, let's just say that you didn't get that play. We came back, you could have shorted off the volatility pivot because once you're under the volatility pivot, you could take that play. I prefer to take my plays off the momentum pool. So if we got a reset and we dropped down here, then as soon as we broke back above, you could have taken the play to the upside. Again, I don't like this stuff unless we're above the volatility pivot and we're above the pool. So this would have been my next natural entry for me personally, based upon my risk profile. You guys can trade any of these levels up and down, okay? I'm telling you, they work, okay? And by the way, the proof is in the pudding, right? Like, go ahead and take a look at this chart, right? And it is respecting these levels, guys. Look at this right here, okay? Look at this, where we bounce to. We are respecting these levels, guys, okay? So again, you can trade them level to level, but for me, for my risk profile, I like to take it at the entry of the pool, right? And so I would have taken a long here. I would have taken heavy profit at the volatility pivot. We rejected off the Bollinger Band, so I would have taken the rest of my profit there after we got underneath the volatility pivot. Okay, and then that could have been a shortable moment back into the pool, which for me, I could have shorted here with my risk profile. You can kind of be a riskier guy and short off the volatility pivot. But, I would have entered here and then I would have taken my profit at the bottom of the pool. When we got a nice bounce on the 5 minute or 15 minute, I could have taken that north across the pool again, and I could have just held that trade. And then, if I had missed this, then where I would have gotten my major setup, just like this major setup down here, would have been right here, above the pool, above the pivot. Boom, guys, boom. Okay, you could just like take that right there if you missed the first entry. So again, these things provide you with multiple setups, and again, you didn't get stopped out. Okay, that's the key point. You didn't get stopped out. These were very clean trades. What does that mean? You can put your stop loss right here. If you got in on the re-entry here, you could put your stop loss right here. If you got in on the entry right here, you could have stopped it. You could have put your stop loss right under it. You don't have to have 5 to 10%, 15% gap. If you're using my method, you can have an air thin gap, guys, and you are really going to be risking very little for the potential to gain quite a lot. And that's the benefit of the alpha method over here. Anyway, guys, again, this is the previous chart. So we are looking at that kind of rejection at the bullish control zone. Things just got a little bit too hot. Okay, now let's go ahead and give the update. Here's your new pivot and pool for the 6 hour, and what you can see is we are re-entering the pool from the top side down. Okay, so essentially we've just lost the pivot on the 6 hour, and we just lost the hold momentum on the 6 hour. Like, literally just happened as I started to record. And so this could have been an initiation, right? Based upon my risk profile, this could have been an initiation to trade to the downside, where you would probably take some profit at general continuation, and then you might take the rest of your profit at the lose momentum. If we break there, then and if we lose the Bollinger Band, then you might take another short. But it's a little bit risky because usually we only grab 50% or so of this, liquidity over here. And so as we fill in this fair value gap, this is what I think the chart is targeting, and it'll show that it's bullish or not if it just kind of wicks down here, tags the Bollinger Band midline, tags the neutral point of control, and then kind of turns around, right? And then we would take the trade from here to the other side of the pool. We could continue to take it if it crosses above the hold and volatility pivot. And your second point of, your second major entry would be above this bullish control zone because it's too close to the volatility pivot. And then you would just put your stop loss under the pivot or under the bullish control zone. Just because there's a little bit, it's a very thin area right there, but you're going to want to manage your risk if you miss the re-entry of the pool. Personally, this is where I would take the next long, and then I would just put my stop loss under there or under the neutral point of control, which would be extra safe. And then we can just see what happens, right? Now this thing could end up like double bottoming or something like that, and you could get stopped out. So you're just gonna want to make sure that that's a nice tight stop loss as this thing kind of resets. Again, it got super overheated, guys. This was a huge drive up on the 6 hour. Okay, so you can see we do this before, and you can see it drops down. Maybe it could have flipped it back up, but in some cases it just loses it, right? So if we consider that this could happen again, a drop down, kind of a nice bounce, and then you're just gonna have to see, does it hold it or does it lose it, right? And so again, don't forget your stop losses. If the chart isn't as bullish as we think, then we could end up losing this area, okay, this area over here. We could end up losing the Bollinger Bands on the 6 hour, and maybe this was a fake out to the upside. Now, if the markets are bullish because of that China liquidity, the Fed pause, and also the BlackRock news, then I suspect it would hold this area and then continue on its way. But we'll find out. Okay, we'll find out. So let's see, the volatility pivot is at 26,603, and then the bottom of the pool is at 26,118. Re-entry the pool, we've already re-entered, it's at 26,507. And currently, this candle is just hanging on to that line. So we haven't actually lost it yet. This thing has 5 hours to do a reversal, and it could end up on the positive side, in which case we would never have actually re-entered the pool. We would, in fact, just to be kind of doing a little dip. So Again, like you could long off of the volatility pivot or the bullish control zone if you wanted to, if this thing avoids dropping in. But we're gonna have to find that out in 5 hours. Okay, so this candle is just forming. Unlike the 1 hour, we just don't know what it's doing. Let's go ahead and put on the EMAs for this time frame, and you can see that, yeah, we're above the 21, above the 9, above the 4, bullish, bullish, bullish. But of course, we have this liquidity down here, and so it would be nice just to wick down, grab the liquidity, check the 21, and then go on our merry way. We could also do it at the 9 there, okay? Guys, let's go ahead and jump over to the daily chart. And same principle, we're going to take a look at the one of the previous daily setups there. And you can see that we would have had this entry down here at the bottom of the momentum pool because our momentum was to the downside. It reversed to the upside, and then we're taking the momentum trade to the upside. And you had two chances to get in on this trade and to take it all the way to the neutral point of control. You were never stopped out, and you got extra confidence when we passed the volatility pivot. Okay, and so because we were above the pivot, above the pool, you could have had a second entry right here at 25,777. So guys, you missed this entry. You got a second chance. There was a wick there. Okay, you can see that wick right here. Right, just kind of a little wick right here. And so if you missed this candle, then you could have gotten that candle. And if you missed this ride up to the momentum pool, then because we were above the volatility pivot, above the pool, you could have had that second entry right here, and you could have taken it to the Bollinger Band midline, to the neutral point of control, which would have been a natural territory to take your profit. And as you can see, we're starting to get a red candle for the first time. And so that was a natural place to take profit. The alpha momentum pool system is absolutely working it. Alpha fam, you guys are absolutely killing it. If you're understanding these rules, then you guys are absolutely killing it. I don't think anybody could trade better than this, to be honest. I mean, yeah, I know that a lot of smart money can just, really tap into that, very specific line and just snipe the heck out of those wicks. But in terms of trading on confidence and validations and confirmations, this is a darn good strategy. And if I throw on our EMAs, you can see that there was no reason to take this trade down here based upon EMAs. Okay, this is completely based upon the momentum pool showing you its logic. Okay, so again, this is a system that I've developed, and I think it's very unique. I don't think there's anyone else doing that, and so I just hope it benefits some people. I know it's not going to be popular until people understand it, but I'll try to just continue to have teaching moments for new people. I just want to prove to you on every single time frame it works. Now let's go ahead and get the update to the daily because again, that was the old chart. And what you can see is that, of course, since we have these EMAs on, you can see the 21 and the 9 here squeezing to the upside. We popped up, we're retesting it. This could have a bullish continuation, guys, okay? But again, we do have that liquidity. So on the shorter time frames, if we do have a drop down, as long as we hold the 1-day volatility pivot at 25,341, which conveniently is at the 200 EMA over here, then I would expect that we just recover this, okay? And if we re-enter the pool, that's again going to be your longing moment at to 25, 8, 25 or 25,850, depending on if you prefer the MACD or the RSI. I prefer the RSI. Guys, then you would probably take some profit here at 26,507, and if we get above that, then you could get a fresh long above 26,550 there, okay? Because the neutral point of control could have a little bit of shenanigans there. We are currently under the neutral point of control, which does suggest that bulls on the daily don't actually have the control of the chart that some people think that they do. Okay, so again, until we get embedded above 26,000, 500, 26,550, which I was saying in the last episode, I don't trust anything on this chart below 26,500, and that I strongly, strongly, strongly prefer to be above 27,000, which of course is the neckline of that head and shoulders, right? Then this could all just be a fake out, just like this area up here. Okay, we could easily just, throw in the towel, and maybe it's just a tough nut to crack. 1, 2, 3, we broke through, and 4, are we going to fall through, right? So you have to understand that the 200 EMA and the 300 EMA, they're tough nuts to crack, guys. And the daily chart just may have to take a couple swings at them before it continues on its way down. And we never did fulfill that measured move of the head and shoulders, which again is at 23,000. And so just be aware that unless we strongly hold above 26,500 and preferably above 27,000, there's always going to be that risk to finish the measured move on the head and shoulders. And I'm one of the few people who are going to emphasize this to you, but I want to be really honest with you guys off of him. I don't want to be just some hopium nut, and I also don't want to be a perma bear. That's why I've also been very bullish, because as we know, a falling wedge is a bullish structure. And yes, even if we have the fake out to the downside, there's a good chance that if it flash wicks, not if it gets embedded, but if it flash wicks back up, then it's just a fake out before a breakout, okay? And I've also proven to you that these things only have a 70% hit rate. That means 30% of the time they can fail, and you can just get embedded underneath them. And so again, I don't want to be a perma bear, don't want to be a perma bull, but you look at this wedge and you tell me, have we broken out yet? Have we done anything special? No. Okay, don't let the perma bulls convince you otherwise, because they can get slapped down. You want to hold this area up here, 26.5, 27,000. It's the bottom of this head and shoulders. We have, guys, okay, like, we made a head and shoulders, we broke down, and now we're just bearishly retesting the neckline that we broke down from. We could get slapped down, okay? Just remember that. And then maybe we do that bullish thing. Just remember that. We're on the weekend. It's low liquidity on the weekend. There's a holiday on Monday. Things can get funky when the market makers basically have the markets to themselves, and the professional traders aren't, they're on vacation because it's the weekend, right? And holiday. So just be careful. But you can see that this open liquidity is just right here at the midline, and as long as we hold that, there's reason to be hopeful. Okay, so just chill out and let's see what happens. Okay, you haven't missed anything, guys. Okay, you haven't missed anything at all. This was nothing. Okay, we've seen it a million times. This was nothing, but we were losing the wedge, and now we are on the bullish side of it again. So nice, right? All right, I think I emphasized that enough. The final thing that I want to talk about here is the week and the 2-week. I'm not going to review the past week. I'm going to review it for the 2-week, because as I've mentioned many times, I believe that the charts are operating off of the 2-week, not the weekly. But you can see that we did re-enter the momentum pool on the weekly. And so, if this thing eventually does cross to the other side, that wouldn't be unexpected. Again, guys, I just want to show you how these pools work. If you had taken, we had momentum to the downside, all right, on the weekly. Let's get this on the weekly here. We had momentum to the downside. We got pushed up, and as soon as we re-entered the pool, all right, and again, I gave this thing to you in advance, guys, okay? Don't tell me I didn't give you this to you. Just look at the past episodes. Then you could have taken that long, and you haven't gotten stopped out yet. You could have taken that long. And, it's more humble than the wick. It's only 2%, but for, on whatever leverage you want with a very tight stop loss, that's an excellent play, okay? And again, your altcoins, Also, it also applies to your altcoins that are following Bitcoin. So just proving to you, how that works. But anyway, we are re-entering the momentum pool here, and more importantly for the weekly is actually the EMA structure, because I do think that the EMA structure is important on the weekly. I just think that the 2-week is leading the market, but the weekly EMAs are very, very important. Okay, guys, and these do close tomorrow. You can see that I was telling you in the last episode that we needed to get a flash wick to the upside and then fill in a very narrow gap. And look what we did, guys. Look at this narrow gap here, okay? We had the 21, and then we had the 9 up here. The 4 was pressing down, and then we have this 200 SMA right here. And what did I say? We have to get above the 200 SMA. We have to get into this area right here. We are currently underneath it. Okay, now we filled in that narrow gap. It's extremely tiny, right? We filled in the narrow gap so that we're now within striking distance. But what I need to see is within the next day, because we only have 1 day, we need to get essentially strongly preferably above 26,900. That's going to put us on a strong footing there. 27,000 is going to be much, much better. But at a minimum, we need to recapture this 200 SMA, which is currently at 26,540. So again, 26,550, preferably 27,000. Okay. And the EMAs do not lie, guys. Okay, the EMAs are your friend. So please believe the EMAs. If you don't believe me, at least believe the EMAs, guys. Okay. And anyway, the pool did say that we could take a long there. If you're in that long on the weekly, these things take forever to play out because of the weekly chart. But we don't get above the pivot unless we're 29,000, and we have a chunky resistance up here at 27,9, 28,100. So, actually this pool should come down. This was when I was experimenting with expanding the pools 2 weeks ago, or pardon me, 2 episodes ago. But yeah, this would suggest that we could pump all the way up to 27,993. And then, we're going to still be under the volatility pivot. So it doesn't mean that we're going to make it necessarily, right? Like if just because we cross the pool doesn't mean that we're going to make it. We could end up coming back down. But the question is, do we come back down bullishly, right? Or do we come back down, with a vengeance, basically, right? Or does this week just end up dropping and, we just get embedded underneath the Bollinger Band midline here? Those are the 2 ugly scenarios. But from what I can see, we are starting to cross the pool. And for the time being, that's a good thing. And maybe next week we will continue that path. Just the volatility pivot is a little bit high now. So we're going to have to watch out. We're not really safe on the weekly until we're above 29,000. That should come down on the closing tomorrow. We'll find out. Let's go ahead and jump over to the 2-week. And guys, you can see that on the 2-week, hey, look at that, okay? So we would have been over here on this candle, right at the top of the momentum pool on the 2-week. And look what happened. We crossed the pool. So that underneath the volatility pivot re-entered, right? We had upward momentum, and then it shifted to downwards momentum. That gave us approval to short into the pool. You take that short, you would have gotten 9% to the downside off of this short. And you never got stopped out, guys. That's the key point. You never got stopped out. You could have an incredibly tight stop loss, which means you could have done a huge leverage, right? And so, yeah, it took a while, but it eventually went all the way to the other side. And then we bounced off of that. And what are we doing again? We're coming to the other side again. So, right now we're just on the lookout. Are we going to close above 26,753? and get out of this pool, that's going to be pretty bullish. But we'll still be below the pivot as long as we're under 28,780. And so both the 2-week chart and the weekly chart are saying we're not out of the woods no matter what happens with the wedge until we're above 29,000. And as you can see on the 2-week, we didn't actually retest the Bollinger Bands or anything, and we're still kind of far away from them. So, there is still a chance that we do something just kind of screwy and then go on our way, okay? Just be aware of that. Just not out of the woods, not quite yet. However, we are above the 9 EMA, which is excellent, and we are above the 21, which is also excellent. We're just kind of retesting them. And so, hey, there's absolutely no reason why we couldn't go on our merry way should we get above 26,753 by the end of the week, and should we flip the volatility pivot eventually at 29,000. Now, this could come down a little bit. The next 2 weeks could end up having a lower pool, so easier to escape from it. But again, as we stand on the 2-week, I just want to show you how nice it is that this pool on the 2-week worked perfectly. You could have taken a 9% short to the downside using the alpha momentum pool strategy. And guys, yeah, that's it. I think that's a wrap. Let's go ahead and just end the episode there. I think, just briefly, let me go ahead and just go to the 1 hour again, see how we're doing over there. And let's go ahead and throw up that 1 hour chart. Not going to do any new analysis just to update it, but we can see that, yeah, we're holding that volatility pivot. Check that out. Look at that, Alpha Fam. Look at that. We dropped from the momentum pool all the way down to the neutral point of control. Look, these lines matter, guys. And then where did we pop up to? Right there, to my volatility pivot. Look how accurate these lines are, okay, guys? And so maybe this is going to do a reversal, and then again, like if we re-enter the pool at 26,507, then maybe we can take that long to the other side, and who knows, maybe it'll continue, maybe it doesn't, maybe it does, but anyway, that would be a Longian moment for me. Let's go ahead and just take a look at our volatility. Volatility is resetting on the 1 hour. That does suggest there's going to be an expansion mode coming up. On the 6 hour, we're quite overheated in how we've been driven. So this suggests that for the 6 hour, no matter what the 1 hour does temporarily, the 6 hour may need to go into a little bit of a consolidation. And then the daily is just screwing around. It's had so many momentum flips that, pardon me, volatility flips that it's just been the bane of my existence. I hate the daily. Just like the 2-day. Look at this ugly. This is so unclean. So 2-day and the daily have been just so confusing. Let's go over to the weekly. Weekly is much more clean. It's resetting for something. So again, guys, like the direction that we pick on the weekly and the 2-week, it is charging up for something big. And you can see in the history of the signal, at least on Coinbase, there's only been one other at that level. And so this could be a big move, okay? Either up or down. So pay really close attention to my weekly and 2-week levels. On the 2-weekly, the volatility, it's just continuing to contract, okay? So, we'll see what happens. But the 2-week is just too sloppy on volatility. So on price action, it looks great, but on volatility, it's super sloppy. So the weekly is actually showing us a little bit of insight that the 2-week is not on the volatility. So just heed caution here. The next set, okay, the next set that's going to drive the market on the weekly is going to be a big one, guys. Yeah, and it can take a while because it's the weekly, but when it chooses direction, it's going to be interesting. That's for sure. Alrighty. I think we've got all of that sorted out. Price action, momentum, volatility, and also our good old EMAs. Guys, that's your alpha for the day. Stay safe and happy trading.